everybody, welcome once again. I am Krishna and your host. So today we are meeting here for class 11 students, and 11 student we have completed two full chapters. One is basic accounting terminology and the second chapter which we have completed is accounting equation. In quite detail, the whole concept of accounting equation was taught to you. Now the turn has come for journal entries. Yes, the most awaited chapter by many students, journal entries. So let's start understanding the journal entries chapter today. So this lecture is going to be the preparatory lecture for journal entries, in which we will understand the basic concepts regarding journal entries. Let's get started, students. Entries in accounting process, you all must have studied in theory that accounting process start with identification of the transaction, whether that transaction is measurable in money or no, whether it is related to business or no. If it is fulfilling both these criteria, then we decide to record this transaction, and this transaction is recorded in the books of accounts, and the first place where we record this transaction is known as journal entry. So first book where the recording of transaction will be done is known as journal, book of journal or journal entries. Whenever we pass journal entries, we have to follow certain rules. What are these rules? These are known as rules of debit and credit. Rules of debit and credit. What is debit and credit? We had studied in accounting, basic accounting terminology. So rules of debit and credit will tell you that what account is going to be debited and which account is going to be credited, because each transaction is going to have two aspects of it, which is what we had studied in dual aspect concept under gaps. So for debiting and crediting, first of all we need to know that how many types of accounts are there. So to know debits and credits rule, we need to know the types of accounts also. So as per the modern concept, there are actually 5 types of accounts. So types of account, if I write down, types of accounts are 5, where number 1 type is expense account, number 2 is expense account. Let me write it again, expense account. Number 2 account is asset account. Number 3 type of account is revenue account. Number 4 is liability, and number 5 is capital. All of this you are familiar with, because in our accounting equation also we had heard about these types of accounts or these type of columns. But let us understand once again what are these. So first of all, we are going to talk about expense account. What is expense account? Expense can be salary. Expense can be wages paid. Expense can be any kind of purchase of raw material. Expense can be related to electricity bill paid, or printing charges paid, or any other expense which you think you are incurring in the business, in regular course of business, is known as expense account. Then the second type of account is the account which is known as asset account. So we had seen that there are various kind of assets, tangible, intangible. For example, goodwill is an intangible asset. Copyrights are intangible asset. There is fixed assets like building is a fixed asset. There is cash itself, which is a liquid asset, or it's a current asset. And we have stock of goods, which is known as asset. We have furniture, which is also known as asset. So all these are the examples of asset. Let us go to the next kind of account, which is known as revenue account. So under revenue account, any kind of incomes are written over here. So under revenue account, we have let's say sales, any discount received, any commission received, any kind of rent received, etc. Means whatever we are receiving or we are generating as income is coming under the revenue account. What is liability? Next type of account is liability. Our fourth account is liability. Under liability we have loan. Under liability we have creditors. Under liability we may have outstanding bills. Any bill which is not being paid right now, outstanding bills are over here. And under capital is capital only. So first of all, we need to identify the account. First step of the doing journal entry is identification of the account, what account it is, whether it is expense account, asset account, revenue account, liability account, or capital account. The easiest of all these five is capital account, because capital account does not include many things. It is just introduction of capital, withdrawal of capital, etc. And there are few more transactions like interest on capital, interest on drawing, etc. Otherwise, capital account is not affected. Rest of the accounts you will have to do a bit of practice. A simple application of logic will give you the answer of this. After this, what do? We apply the rule that which account is going to be debited or credited. So let us understand the rule. So the rule for expense account, asset account is going to be same, and these three are going to be same. So I can say that I have two groups over here. Here is first group. Okay, this is my group number 1, and the other one is my group number 2. So both have same rule. So I have done the grouping. So first group, which is consisting of my asset and expenses, the rule is increase is debited and decrease is credited. Means if expense is increasing, means we have to pay salary, or we have to pay the wages, we have to pay carriage inward, we have to pay carriage outward, any other kind of expense. So expense account will be debited. So expense increasing will be debited. Similarly, if we have purchased the asset, any asset is purchased like plant, machinery, building, etc., it will be debited. When it will be credited, if the expense is getting credited, means this year's expense include any kind of prepaid expense, it is getting credited, means it is reducing. So decrease will be credited. So expense, if it is decreasing because of any reason, so it will be credited. Asset, if it is being sold, then it is decreasing and it will also be credited. So like this we have to do the entry for debit and credit. Any increase will be debited, any decrease will be credited in expense and asset account both. Now when we talk about these accounts, which are our liability account, revenue account, and capital account, all these three accounts will follow the simple rule, which is just opposite of asset and expense account. Here, if there is increase will be credited and decrease will be debited. Means if there is any capital introduction, it is going to be debited, it is going to be credited, and if the capital is being withdrawn by the proprietor, then it is going to be debited. If we have generated the creditors, means purchasing goods on credit, so creditors will be credited. If we make payment to the creditors, so creditors will be reduced. So like this we will be passing journal entry for all the transactions by simply applying the rule of debit and credit. So remember the rule of debit and credit. First you have to classify, as per the modern concept, 5 different type of accounts. You have to identify which account is there. There are 5 types of accounts. Number 1, expense account. Number 2, asset account. Number 3, revenue account. Number 4, capital liability account, and number 5 is capital account. Expense account means all the expenses and losses of business, which include wages, salary, printing, stationery, legal charges, advertisement, commission, discount, etc. Asset account includes goodwill, copyright, patents, building, land, machinery, cash, debtors, bills receivable, means all current assets and fixed assets are included. Under revenue account, you have sales, discount received, commission received, rent received, etc. Liabilities are all the liabilities which you have to pay to the outsiders. It will be including outstanding bills, creditors, bills payable, loans, etc. And capital is capital. When we talk about the rules are these: the increase in the asset account and expense account will be debited and decrease will be credited. Whereas in these 3 accounts, number 2 group, where we have revenue, liability, and capital, the rule is any increase will be credited and any decrease will be credited. So we are done with the first step, student, where we have to identify the accounts and we have to apply the rule of account. So this is all for today's class. We will be meeting in next class, where we will start doing the transaction and we will understand what is the format of journal and how to pass the journal entries. There is another method too of classifying the accounts, which is known as traditional method, under which you are being taught the classification under real account, personal account, and nominal account. That is not very scientific way of classifying the accounts, but still I will teach you, because in your books it has been given, but we're just in a brief. brief. So in next class, I will give you the brief of traditional method of accounting and the rules of debit and credit. And then we are ready to go ahead with our process of actually journalizing the transaction. Till then, have a great day. Bye. And yes, do not forget to subscribe the channel and like and share the video.